Hello everyone, welcome back to my channel. This is Life with You. Hope everyone stays safe and healthy. This week has been crazy. First of all, it's been super hot outside. I'm sweating just working on my desk and just see my computer, and I'm just start to sweat. In Death Valley, California, even on Sunday, it recorded the highest temperature on earth, 130 Fahrenheit. But you know what? Hot outside of the temperature is the stock market. Yes, S&P 500 just recorded a record high ever. Yes, back on Tuesday. And then also Apple just surpassed 2 billion of valuation, of capitalization. You think that the stock market will actually react negatively among like all this pandemic situation? It's not. Like so far it's been super crazy. The rally keeps going on, although I would say, like my previous video said, it's mostly for the tech stocks, not other sectors, but still, it's crazy. So speaking about investing, this video is purely about investing 101. So back to the basics. So last week when I uploaded a video about the stock market, what's in my portfolio, a lot of you reaching out to me like, oh my god, like this is super good. However, a lot of feedback also says that, hey, can you step back a bit? How did you start the stock market? How did you start investing in the stock market? Disclaimer, I'm not a financial advisor. However, I worked in corporate finance and investment banking for 10 plus years. So this is my knowledge, and it's up to you if you want to apply this knowledge. If you Google it, or if you go to other influencers, they may have different opinion. So when I populated the feedback that I got from my family, from my friends, or from other viewers about my previous video, these are the three primary concerns. First of all, I'm afraid of losing money, of course. The second of all, how do I open an online brokerage account in the US? And the third one is how to start. Where should I start? Which stock should I invest? So I will try to address three of these concerns on my video. Let's start with number one. I would first address which brokerage firm that you should choose when opening an account, opening a brokerage account. There are so many options out there. There's Ameritrade, there's Fidelity, there's Schwab, and then also like the one that targeted millennials such as Robinhood, M1, Webull. So these are the three things that you need to consider when you actually open an account. So first of all, I need you to consider what kind of financial transactions that you will make on your brokerage account. So for the beginner, usually you will start with stocks or index funds or bonds or certificate of deposit. If you're a bit more sophisticated, you will probably want to trade some kind of options, commodity, and not all brokerage firms have this feature. And you will need to actually pay attention to what kind of transactions that you can make on that brokerage firm. The second one, what are the extra features that the brokerage provided for an investor? For instance, Robinhood does not provide Roth IRA if you want to open a retirement fund. Also, if I use Schwab, I can open a checking account with them, and I got a debit card that I can use anywhere in the world without extra charge. The third one, what features available for investors to make investing decision? For instance, large brokerage firms may provide research report. Research report is a report made by the financial institution analyst for a company that provides company business performance, and then analysis of what kind of trend for the next 5 years, and then valuation, and also the stock recommendation. That's very important if you want to decide, hey, should I invest in one stock? All of the factors that I mentioned before are very important before you decide which brokerage firm that you should invest with. The next question that you have is, what are the required documents in order to open an account? So there are a few documents according to SEC to open an account in the US. First one, social security number, and then employer's address and phone, and then driver's license or passport or ID. The next one, whether you are employed by a brokerage firm. And then the next one would be your annual income, and then your net worth, and then investment objectives and risk tolerance, And the last one, this is the most important one. If you're not a US citizen or if you are a resident, there are some accounts that does not allow you to open on their firm. For example, Fidelity. Fidelity does not allow opening up an account if you're an alien or a resident. There are some firms that allow, such as Schwab, because I invest there. However, some additional verifications may be required when you open an account, such as your utilities bill. Just like when you apply driver's license or you apply Real ID, sometimes there are additional verifications, especially if you're not a US citizen. So these are pretty easy, and these are pretty standard documents for you to open an account. It's fairly easy. It doesn't take a lot of time. It probably takes about 2 weeks or 3 weeks after you apply, and then the account will be open. The final section of this video, I would address your concern, how should I start to invest? First one is start small. So if you want to start investing your money and you don't know anything about investing, please start with the amount of money that you're willing to lose the full amount of money. And that amount of money is the one that you probably, this money you don't need. Don't take out your emergency fund, don't take out your children's college fund, or if you have student loan, please still pay the student loan and don't use the money that you used to pay the student loan unless it gets suspended, because according to President Trump's CARES Act, the federal loan can be suspended until end of the year. Speaking of emergency fund, don't forget to set aside at least 6 months of living expenses for emergency fund, because in this current situation there might be layoff or pay cut or something else, emergency like medical expenses that can happen with you or your family in the future. And also, if you have emergency fund, don't forget to save it on high yield savings account. So now back to stock investing. So if you start small, like I said before, probably you deposit about $500 to $1,000 to start investing, right? So if you started with that amount of money, you probably think, oh my God, like Amazon price, one stock is about $3,000, right? How can I start to invest in Amazon, for example? But don't fret, because currently there are a lot of brokerage firms that offer fraction share investing. With this method, you can get involved without even buying a whole share of the stock. With this method, you can buy as little as $5 to $10 for a single trade. So this allows you to buy a piece or slice of the share with a much lower entry point. So the brokerage firm will buy a whole share of the stock, and they will divvy it up into these investors that will take the single pieces or slices of the stock. Mind you, not all brokerage firms offer this kind of services. Schwab just introduced this around June 2020. Even if they have this kind of services, sometimes they charge you. So the next step, which stock should I buy? My strategy, as I mentioned on my previous video, is to buy a stock that you understand, the company that you use the product, or probably the company that you are passionate about. For example, Tesla. You know that there's a lot of people, especially the people that use Robinhood, really like Elon Musk so much. So Tesla, if you see, the price soars like crazy. And Elon Musk right now is the 4th richest person in the world. So, because you're passionate about that, your brain just got, oh my God, if I see the news about Tesla in like newspaper, when you scroll down your phone or whatever, your brain ingrained to like, oh, this news would probably propel my Tesla stock, or it may drag down the Tesla stock. Speaking of the news, if you don't have time to follow any news of the company, I will suggest to invest on index funds. Index funds is a type of mutual fund or exchange traded fund, or we call it ETF, that's specifically constructed to track or match components of a specific financial index. For instance, VOO tried to track their performance to S&P 500. What is S&P 500? S&P 500 is a stock market index that measures the stock performance of 500 largest companies listed on stock exchanges in the United States. And then we have VTI, or Vanguard Total Stock Market. This fund tracks a market capitalization weighted index that measures the entire investable US equity market. And then for Schwab, we have SWTSX, or Schwab Total Stock Market Index Fund. The fund goal is to track the total return of the entire US stock market as measured by the Dow Jones US Total Stock Market Index. Since I told you the performance of the index fund will follow the financial market index, you would probably expect a return about 7 to 8%, which follow the average annual return of Dow Jones Industrial Average and also the S&P 500. Of course, this performance could fluctuate, depends on the year, especially, for example, the 2008 market crash would not have 7 to 8%, and this year would probably a bit overperform in S&P 500. Eventually, you need to step up to invest more in your portfolio if you want a better return. For example, if you have initial deposit of $1,000, why not keeping a spreadsheet if you invest $10,000 more? So do a simulation when you play around with this $10,000, and after you're comfortable with the result, you started to gradually invest more in your portfolio. After that, you can gauge your risk tolerance, or what I call also risk appetite. What is risk appetite or risk tolerance? Risk appetite or risk tolerance is a degree of variability in investment returns when an investor is willing to withstand their financial planning. As an investor, you should have a realistic understanding of your willingness and ability to stomach the large swings that may happen in investment. For example, in 2008, when the stock market crashed, are you the type of the panic kind of person that just sell everything and try to save your investment? Or are you willing to stomach that, okay, this is just a short term, and you just hold your position in the long term because that's what you believe? So it's up to you. If you are a risk averse, which means risk averse, you don't want to take the risk too much, you are a very conservative investor, or you're more of an aggressive kind of investor. If you're aggressive investors, you will try any kind of financial instruments. You will stomach everything, the large swings and everything. You're okay with that. Or you're like in the middle, which is the risk moderate one. You're not very much of an aggressive type, but at the same time, you're not very conservative type, so you're in the middle. So you need to gauge which kind of investors are you. And that's all my advice for starting and investing for beginners. So these are the basic of investing. I only touch an overview of investing for beginners. There's a lot of things that you probably want to know, or you probably realize when you start on investing. Let me know, give me feedback, give me comments. Please like and subscribe to my channel in order for me to give you more and more knowledge about investing. Okay, see you on my next video, and hope you guys stay safe and healthy. Bye-bye.